Right friends, welcome back to Banking Awareness. This is 21st lecture. We are going to discuss on cooperative banks and regional rural banks. Please look into this slide. Some logos of cooperative banks are given. Abhyudaya Cooperative Bank, Andhra Pradesh State Cooperative Bank, then Saraswat Bank. These are examples of cooperative banks, and we are going to discuss what is a cooperative bank and what is a regional rural bank. Before going into that, I would like to tell a brief about what was the focus before 2000 and what is the focus after 2000. If you look at the focus before 2000, in the year 1969, 14 banks were nationalized. Subsequently, lead bank scheme was brought to coordinate banking affairs in the district. Lead bank scheme was brought. Next important step is the priority sector lending was brought. Then subsequently regional rural banks were established. Cooperative banks were strengthened. NABARD was established in the year 1982 so as to act as a supervisory body for cooperative banks and regional rural banks. So, this was the main focus prior to 2000. What I mean to convey is physically reaching rural people as well as concentrate more on agriculture and rural development. That was the focus prior to 2000. That's why government came up with nationalization of banks so as to reach the interior hinterland of the country. At the same time, regional rural banks were established so as to reach rural areas for agriculture and rural development. NABARD was established so as to streamline the operations of regional rural banks as well as cooperative banks. So, this was the focus prior to 2000. If you look at the focus of the banking system after 2000, probably the focus of banking system after 2000 hinged on the digitalization, because with the advent of information technology, with the advent of technology related expansion in banking sector, the focus changed from 2000. This is post 2000 you can say. The main focus is financial inclusion, no frill accounts, subsequently called BSBDA, subsequently now they are called Pradhan Mantri Jan Dhan Yojana, and in early 2000s a business correspondence model was brought, and core banking solutions to integrate the activities of the banking system. That is the main purpose of core banking solutions. That is another focus. Then mobile banking, you are able to transfer money by using mobile banking. Kisan credit cards were given. Kisan credit cards were developed by NABARD. Then now linking with Aadhaar is expected to go on shortly. That is the JAM, Jan Dhan Yojana bank account, Aadhaar and mobile number linkage. By linking all these three, then what will happen? Duplicacy can be eliminated. Then white label ATMs are being established. One such example is IndiCash. That means not only banks, other private firms were given for establishment of ATMs. Small micro ATMs also came into existence in rural areas. So friends, this is the focus post 2000, and prior to 2000 the focus was on strengthening cooperative banks as well as regional rural banks. These two issues we are going to discuss in this lecture, right? So, cooperative banking institutions, what is the difference between a commercial bank and a cooperative bank? Commercial bank works fundamentally on commercial lines. Profit is the motto. What is the purpose of cooperative bank? Cooperative banking institution will have shareholders. The main purpose is shareholders are to be benefited. You can say it is mutual benefit. And if you look at cooperative banking institutions, there are primarily two types. One is urban cooperative banks. Second one is rural cooperative banks. Urban cooperative banks is basically to look at micro credit in urban areas, small value loans to artisans, small scale industries in urban areas, that is the main purpose of urban cooperative banks. Rural cooperative credit institutions, the basic goal is agriculture and rural development. And within this rural cooperative banking structure, there are two types. One is long term, the second one is a short term. Long term are basically known as land development banks. There are two levels. One is state cooperative agriculture and rural development banks. Second one is PCA RDBs. That is a two-tier structure. This SCA RDBs and PCA RDBs. This is a two-tier structure for long-term loans for development of agriculture in rural areas. They are sometimes known as land development banks, but in several states they are not in existence. So we are not going to study in this lecture about this long-term institutions, but short-term institutions are existence in several states, and we are going to deliberate in detail about these short-term rural cooperative credit institutions. Normally this is a three-tier structure: state level, state cooperative bank, then district central cooperative bank at district level, then at village level that will be PACS or primary agricultural credit societies. Friends, we are going to discuss about rural cooperative institutions, so basically short term loans, so that is a three-level structure. One is a state cooperative bank, second one is a district central cooperative bank, and the third one is at village level, maybe for a group of villages, that is primary agricultural credit societies. So we are going to discuss about these cooperative institutions in this class, right? So what is the origin of cooperative banks? These cooperative banks were originated in India subsequent to the enactment of Cooperative Credit Societies Act of 1904. However, cooperative central banks were established subsequent to the new act passed in 1912, and subsequently McLagan Committee in the year 1915 gave some recommendations, and Anyanya Cooperative Bank, Vadodara was the first cooperative bank to be established not only in India but also in Asia, and these cooperative banks accept deposits just like banks and also grant loans. And if you look at the cooperative banking structure, for long-term loans, land development banks we are not going to discuss now. Land development banks are not in existence in several states, and we are going to discuss about this state cooperative banks, district central cooperative banks and primary cooperative credit societies. This is one structure basically for development of agriculture and rural development in rural areas. And for small value loans, that is primary or urban cooperative banks. Right friends? So about this three-tier structure of cooperative banking system, the main aim is rural financing for agriculture, small scale sector, rural artisans, and three things I would like to tell you. Issue and cancellation of license lies with Reserve Bank of India. Since it is a cooperative form of institutions, they have to register with the registrar of cooperative societies of respective state, and to function as a banking institution, issue and cancellation of license lies with Reserve Bank of India. Second one is administrative control is with the state government. Third important point is policy guidelines or supervisory control is exercised by NABARD, and it will be federal in structure with the distinct jurisdiction and control. It will have distinct jurisdiction. What I mean to say is, Odisha State Cooperative Bank cannot establish a bank in Andhra Pradesh or West Bengal. That means their jurisdiction is limited, right? So this is basic structure and basic regulators with regard to the rural cooperative banks. If you look at urban cooperative banks, they are called primary cooperative banks sometimes. So primary cooperative banks or urban cooperative banks are one and the same. The main aim is microfinance to urban poor, normally situated in urban areas. There will be shareholders. They are controlled by state governments and Reserve Bank of India. NABARD has got no role here, because they are not concerned with rural lending. Then issue and cancellation of license lies with the Reserve Bank of India, and their main loan portfolio is small scale industry, housing, gold loans, personal loans. Let us discuss this three-tier structure in detail. The first one is state cooperative banks. This is called Apex Bank. Examples I have given: Odisha State Cooperative Bank, Andhra Pradesh State Cooperative Bank, Gujarat State Cooperative Bank. They get their funds from general public by mobilizing deposits. Not only that, they will have access to finance from NABARD at low interest rates. That is called refinancing. NABARD will give loans to state cooperative banks at a low interest rate, and in turn state cooperative banks will pass on the benefit to lower banks. So that is called refinancing. So state cooperative banks will get their deposits from public. Not only that, they will get refinance from NABARD. Second important point is they grant loans and advances to central cooperative banks and supervise their functioning. I have already told you central cooperative bank will be at the middle level or at the district level. So the main purpose of this Apex Bank or state cooperative bank I have given here. But what are the main defects? It mixes up commercial banking as well as cooperative banking. It collects deposits, it gives loans, so it is into commercial banking. Not only that, it is doing cooperative banking activities by giving less interest loans to agriculture and rural development. And several state cooperative banks have insufficient share capital. And the most important thing is administratively they are managed by state governments, and sometimes they are into poor management by state governments. So main purpose of state cooperative banks and main defects I have given here. If you look at cooperative central banks, they are at the district level, like the Thane District's Cooperative Central Bank Limited, that is in Maharashtra. The Warangal District Cooperative Central Bank Limited, that is in Telangana. Cuttack District Central Cooperative Bank, that is in Odisha. Like that, each district may have this central cooperative bank. At top level state cooperative bank will give loans to district central cooperative bank, and in turn district central cooperative bank will pass on the benefit to primary agricultural credit societies. So the duties I have given here, they are established based on Cooperative Societies Act of 1912. They are at the middle level or second tier. First is state cooperative bank, then district central cooperative bank, and at the lowest tier is PSCS. I have already told you they get finance from state cooperative banks, and they keep a watch on the functioning of PSCS, right? So this is a district central cooperative bank structure, and they may have several branches in the district also. So main defects, some are financially and organizationally weak, as I have already told you. They mix up commercial and cooperative banking, and at the same time the most important aspect is that they do not have any mechanism to look into the creditworthiness of PSCS. PSCS is at the lower level, at the village level, and they don't have any mechanism to look at the creditworthiness of PSCS. That's why sometimes financial viability of these district central cooperative banks is in question, and regulatory framework is weak because these cooperative banks administered by respective state governments. Right? Look at the last tier, that is at the village level, that is primary agricultural credit societies. They may be available in one village or maybe a group of villages, and association of persons. This is nothing but association of persons living in a particular locality, living in a particular hamlet, living in a particular village, and 4, 5, 10 villages also can have one group of one PSCS, right? So each member contributes to the share capital of the society. Normally nominal share capital will be there from each and every person, and this is the lowest rung in the cooperative credit system, and above it district central cooperative bank will be there. So, District Central Cooperative Bank will look after the working of PACS, right. So, remaining things I have given here, please go through them. What are the main defects? Main defects are fail to fulfill the credit needs of small farmers and tenants, and most of them are financially unviable, and they have failed to fulfill the diverse credit needs of farmers, but they are successful, no doubt, to some extent. In some states they are highly successful, but in some states, due to the poor administrative framework, they are into failures. And if you want cooperative banking system as a whole, is it a successful experiment or a failure experiment? If you ask a straight question, please look into this. It is successful up to some extent. It provided cheap credit to farmers, saving them from the clutches of money lenders, because money lenders are charging huge interest rates. So, cooperative banking system is successful up to the extent they are able to bring out the farmers from the clutches of money lenders. Definitely some of the small or marginal farmers are benefited, and at the same time, please don't forget, it promoted the savings habit among the rural people, because several villages even today do not have bank branches. That's why PSCS inculcated the habit of saving in rural areas also. But if you look at failures, excessive overdues in villages, people take loan, but deliberately some people will not pay back, and there will be some political angle to it, because PSCS are normally controlled by the persons having political connections in several states. That is the biggest drawback of this PSCS. Inefficient societies, political interference, multiple controls. If you look at the cooperative banking system as a whole, it is multiply controlled. That is, the supervisory functions are given by NABARD. RBI controls to the extent of giving licenses and cancelling licenses, and whether the bank is working subject to the framework of rules specified, RBI has got that duty to see. But they are under the administrative control of state governments, and most of the times these state cooperative banks are headed by some politician. Then there are allegations that it benefits big landowners in some cases, and they are dependent on external resources to some extent, and these are the failures. Overall, if you look at in the spirit of the things, I think the effect of these cooperative institutions cannot be underestimated. No doubt they have brought several farmers out of the clutches of the money lenders who used to charge exorbitant interest rates. Right friends, this is about the cooperative banking system. If someone asks you whether it is success or failure, definitely there is a case for success for small and marginal farmers. But there are weaknesses in the cooperative banking system also. I have listed out here. So be frank in admitting there are failures, and at the same time, please do mention successes when you are discussing about any financial institution. Right friends, regional rural banks. Please look into this slide. Vananchal Gramin Bank, Karnataka Vikas Gramin Bank, Dena Gujarat Gramin Bank, Uttaranchal Gramin Bank. These are examples of rural banks. What is the need for rural banks? I have already told you, from late 1960s, for next 20 to 25 years, government focus was physically to reach into the rural areas. Accordingly, I have told you, banks were nationalized, lead bank scheme was brought, priority sector guidelines were brought, cooperative banking institutions were strengthened. At the same time, these rural banks were also established, and it is one of the 20-point programs of the then Prime Minister Indira Gandhi in the year 1975. And one of the 20-point programs is institutional credit to farmers and artisans in rural areas. So, keeping that in mind, these rural banking institutions were established by promulgating an ordinance on 26 September 1975, subsequently regularized through Rural Banks Act of 1976. So, the main purpose is to provide credit to small farmers, marginal farmers, agricultural laborers, artisans, and to develop entrepreneurs in rural areas. So, this is the main purpose or the main motto behind starting these regional rural banks in the year 1975. I have given salient information. First RRB, Prathama Gramin Bank. Date of inauguration on October 2nd, Gandhi Jayanti Day in the year 1975. Please don't forget, at that time, India was under emergency, and first 5 sponsored banks I have given there. And please don't forget, United Commercial Bank, subsequently its name got changed to UCO Bank. First 5 RRBs were started in 4 states, Moradabad and Gorakhpur in Uttar Pradesh, Malda in West Bengal, Jaipur in Rajasthan, Bhiwani in Haryana. Initial authorized capital was rupees 5 crore. Share of the organizations, central government will have 50%, state government 15%, sponsored bank 35%. But friends, please don't forget, 2 things primarily changed subject to the Regional Rural Banks Amendment Act of 2015. Recently, central government brought Regional Rural Banks Amendment Act of 2015. As per that, the authorized capital is raised to rupees 2000 crore. Originally, the authorized capital was rupees 5 crores. Now, the central government raised it to rupees 2000 crores. That is the first change. Second change is, initially when the banks were established, the share was 50, 15, 35. But now that is also modified. And now, as per this Amendment Act, the combined share of central government and the sponsored bank will not be allowed to go below 51%. That is the only stipulation. As per the RRB's Amendment Act of 2015, the combined share of a center and a sponsored bank together will not be allowed to go below 51%. That means center and sponsored bank put together should maintain 51% share. This is the major change. And features of rural banks. Rural bank is a scheduled commercial bank for all practical purposes, and all these will be enlisted in Schedule 2. And this regional rural banks, it is a scheduled commercial bank. Area of operation is limited to specific region. That means if I say Dena Gujarat Gramin Bank, certain districts will be allocated to it. It can open branches and it can conduct its operations only in those areas. Then normally interest rates will be slightly less when they are granting loans, and they enjoy many concessions and privileges, especially from NABARD. And various functions, accepts various types of deposits, loans and advances to marginal farmers, agricultural laborers, rural artisans. So, these are the functions. And if you ask a question whether they are successful or not, initially the number of rural banks were high and they were into losses. Subsequently, A.M. Khusro Committee on Agricultural Credit Review recommended merger with the sponsor banks. A.M. Khusro Committee recommended to merge all these rural banks with their sponsor banks, but subsequently M.C. Bhandari Committee suggested amalgamations of smaller rural banks into bigger rural banks. Now, government following M.C. Bhandari Committee recommendations, and now the government is in the process of amalgamating rural banks. Now, around 56 rural banks are there in the country. And if you ask what is the reason for failure, they are not that successful as anticipated, because the reasons for failure are, they are into losses because their operations are restricted only to rural areas. And when bank branches are opened only in rural areas, how they become financially viable? That is the biggest question mark. Second one is poor deposit mobilization because they are situated in rural areas. Third one is hasty branch expansion. Branches were expanded in a hastier manner, especially during 1970s and 80s. Next important aspect is inefficient staff. Why? Because the parent bank used to send inefficient staff to their rural bank branches. Because there is some sponsor bank used to send officers and staff who are dubbed as inefficient to these banks. That is one reason, and after going to these banks, they are becoming much more lethargic because of the reason they are situated in rural areas. Last but not the least is the most important aspect which is to be looked into before going into the success or failure of these banks is because of multi-agency control. On one side, parent bank will be there giving instructions. On the other side, NABARD will be there, which is vested with the supervisory functions for agriculture and rural development. And RBI is there on the other side. So, because of all these reasons, and at the same time, as these branches are situated only in rural areas, their financial viability is in question. So, because of these reasons, they are not that successful. But overall, one thing is certain, that banking services to the rural areas were made possible because of all these efforts made by the central government, that is strengthening cooperative banks, establishing rural banks, nationalizing banks, then expanding their reach to rural areas, and now because of technological intervention, banks are being expanded to remote areas by utilizing the technology available. So, whatever is said, the success of these cooperative banking institutions and rural banks cannot be underestimated. They have to be given their due weightage when you look at the elimination of poverty in rural areas. But the final point is, they can be further strengthened so as to achieve the goal of financial inclusion and financial deepening in the country. Right friends, please do join for 22nd module. We are going to discuss about NABARD, the lead bank scheme and other aspects. Have a nice day. Thank you.